Check this out right here. Watch this. Watch the magic. 3, 2, 4, 5, 6. Huh? Huh? It's good, right? Yeah. It's good. I believe it is good. Welcome. And sorry about that delay there. We tried to get fancy with the stuff when we shouldn't have. We should have just left it all the same, but we didn't. That's okay. Because you know what? It's a quiet week for the market. Historically, it's a slow, low volume kind of week with little activity. In fact, the volume today was about half of what we typically see. That's going to get worse. And so we kind of debated, should we even just do this, or what should we do? And I said, no, I got stuff to share with them. I'm here. Let's talk about it. And also, we don't normally see a lot of economic data come out this week. There's really no earnings to speak of. But today we had news out of China. We had Tesla news. We had bond market news. And I was like, all right, well, there's stuff to do, right? There's stuff to look at and talk about here. So we'll talk about that little by little as we go here. Bond prices falling throughout the day really weighed on the tech stocks, growth stocks, things like that. And those, anything tech related or growth stock related really held back and lagged the market here today. So there was no chance of really getting anything going, which is a shame because we were positive last night. Futures markets were actually up there, but it's just not going to happen that way. Let's see what happens here. We're going to do it this way today and just show the charts, make sure everything is in here so you can see. This is the S&P. We'll just make it simple for you guys to see. It's the last week of the year. Is there a chance we're going to turn positive this year? Remember, the high of the year was the first day of the trading year. So it never once went higher than that. There is basically zero chance that we're going to recover all of this and go positive for the end of the year. I can't think of one single thing that would make that happen. So let's not hold our breaths. Also, it would be the first time ever that actually happened when the stock market is down over 15% year to date. Here is the other times where, let's make sure you can see. Yep. Here's the other times where that was the case and how the stock market actually finished out in the last week to complete the year. So, for example, we were down over 15% in the last week of the year in 1957, and we finished down the year 15.4%. Same thing in 73 and 74. Those were kind of interesting years because if you lived through inflation, well, you know what those years were about if you were around. So we did not recover and go positive. We did not recover. 2002. That was interesting because that was the Fed tightening that basically, crushed the tech bull market there. But a little history lesson for you. And then we all know, most of us, what 2008 had. So the moral of that story is there's just no time in history where the market went whoop at the end of the year, the last week, and went positive. There's one good thing, though, if I can pop over here. If you look at the performance in the last week of the year, when we're down at least 15%. There's 5 other times that we can look at that. They were almost all positive. In 1957 attempted a rally in the last week, 1.2%, 4%, 73 and 74, despite the high inflation years there. 2002, despite the tech market falling apart, didn't get much worse. We could try to put a positive spin on that. And 2008 takes first place, 4.6% in the last week. So in other words, today, what, 1/3% didn't do anything for you. But if you see a rally into the end of the year, it's not going to make much of a dent. So we are going to finish negative there. But on the bright side, yeah, it's usually a positive week. That average there, 2.4% if you're interested in that. I was looking around at the market here this week, and there's an important emotional point here in the market. So if you started investing at the beginning of this year, you just had bad timing. You'll be fine in the long run, but you just had bad timing here because there's not one point where you saw a profit. It was maybe less worse than it was before at different points, but in other words, you just trended lower. It just horrible, right? Now, imagine you started investing anywhere in July, August, September, October, recently here. Anytime in here, you saw a profit. You then retraced those profits and saw a small loss. You then saw a small profit. Maybe you're back to break even, right? So inside of this, I don't know, can I draw a square? inside of this, right in here, you could say the market basically has been trading inside of a range. What does that mean? It means that people that are newly invested over the last 6 months, they don't share the same feelings that you do if you started investing at the beginning of the year. They don't share the same feelings that you do if you started investing exactly 1 year ago today. They don't share the same feelings you do if you invested 2 years ago, right? So think about what happens there. You now have a new wave of people that aren't as scared to sell because they can, you withstood a 15, 20% pullback. If from here the market falls 20%, we just have a new range of people that go, "Ooh, I don't know, this is maybe not so comfortable," but they're not going to really panic. So if we continue this sideways trend here in the market, that actually bodes well for the Fed, the stock market, market participants not being as fearful really about any downward moves. You would be fearful if we were sitting at the lows because we would know every single person has a loss. Well, we can't say that right now. Not everyone in the market has a loss. A lot of people could still have a gain, some very lucky people in here, and a lot of people could be at break even. So that's an important takeaway for the end of the year and really in the start of the new year is that there could be a little optimism there on any new rally. There's people that just started investing that if they see a rally, they go, "Oh, this is fun. I'll invest a little more. Oh, wow, look, it's getting better." And that helps fuel the rally for the people that said, "I'm out. This scares me. Oh, no, the market's taken off without me. I got to get back in." So you start layering in the different types of bulls that there could be. Really kind of interesting. For the moment, there's just, if we take that and put that off to the side and just that's trying to paint an awfully rosy picture. I think you get what I'm doing there. But for the moment, there's not much else to like out there. The good news is that is typically the case at market bottoms. In fact, if you're one of our research members or you want to join jazzwealth.com/research, I posted a video about the anatomy of stock market bottoms using only data. So you're not taking my opinion for it. We're looking at each and every single one of them. We're looking at how long they spend near the lows before they do rally, how much do they fall at the end of a bear market, and how much do they rally at the beginning of a bull market. And I show those examples in ways you have not seen. No other advisor, nobody's probably even shared that with you. So if you want to join our research site, you're welcome to do that. And if you're a client, of course, just hop on into the research site and you'll be good there. Like I said, there's usually at market bottoms, the news is as bad as it can be. And that's what we kind of have right now. You've got the AAII sentiment indicators, all basically historic lows there. Put call ratios, the Fed sentiment indicators. These are all basically at historic bearish levels, meaning the people that responded, the people participating, the fund managers participating, all very, very not optimistic or pessimistic to levels that they have not been ever in history there. So you've got that. The problem with saying that, "Oh, that sentiment's so bearish, I want to be a contrarian, I want to go against that," is the economic news is getting weaker and weaker out there. Housing numbers, manufacturing numbers, they're all getting weak and weaker, if that's such a thing, right? The only thing holding us up, if you look around the economy, is jobs numbers. It's not bad. It's making the Fed look pretty good there, actually. Fed looks totally right in what they're doing so far. Now, the question, what's the biggest question for 2023? What do you think everybody's been asking me? Out of all the things, right? It's all focused around one thing. Well, Dustin, is there going to be a recession next year? I don't know, right? So far, the Fed looks like they're going to be able to avoid it. Every indicator that is a high probability indicator, like the 2s, 10s, the inversion of the yield curve, is showing, yeah, we should hit a recession. The average analyst consensus on Wall Street is 65% right now. I'd say about half that if it were me. But people aren't silly. Here's a fun thing to look at. You can share with your friends. You can even look at this on Google if you want. This is not proprietary data by any means. But we, as people, tend to know when there's going to be a recession. We get it right every time, actually. Not some of the times. We get it right every time. And since the advent of Google, when you can actually look and see what people are thinking about, we can track it. So try this on for size. We have plotted the Google searches for the word recession. Then in gray, those are recessions. I'm just showing two here. I'm trying to squeeze it on a chart. But in 2008, as people started searching recession more and more, wouldn't you know it, we were in a recession already. It was there. We lived it. As recession starts to bleed away, of course, it would have been marked a recession later, or right about in here. We wouldn't know it was a recession during a recession. You guys know how that works. Okay, then we're trending lower. As we spike again, what happens? Oh, COVID. Okay, we're in a recession. People know. We jumped the gun a little bit there. What's happening now? We are 80% higher than the highest search term ever, or search history ever for the term recessions. We just came off of that level. Will this be marked as a recession? Were we wrong this one time, but we've been right every time? That's kind of cool to see, isn't it? I think it's cool there. Again, Wall Street consensus is 65% chance of a recession in 2023. I would venture to say it's about half that, but you don't care about my opinion, and that is an opinion, so we'll move on. Let's look at crude oil here today. We actually hit $80, by the way. Almost closed there. Hits $80 and has retreated for now. There's a lot of stuff going on there, and remember, China's reopening. The news out of China, them not making international travelers quarantine, has obviously is good for demand. They are the number one user of oil out there, so definitely something to pay attention to. I'm going to bounce around a little bit here. If we're looking week over week, the biggest mover from lows to highs would have been energy, still in kind of a neutral but uptrending territory there. The biggest mover to the downside from highs to lows would be, no, I'm sorry, not financials, tech. There you go. That's the biggest mover. Financials comes in second place, to be honest there. And the rest of the sectors of the market didn't do a whole lot. Communication services, over 1 week, not much. Just basically flat. Not much happening there. Utilities, which has been an exciting one lately, not much today, positive, but right in here, not much. 1, 2, 3, 4, 5, basically a wash. So it looks like it fell, then rallied. That means nothing happened. You want to look over at some of the commodities here. Let's look at gold. Not much, right? Typical end of year stuff. If you see something, I'll use natural gas as an example. If you see something moving, this was the biggest mover in terms of having the biggest range over the last week. Well, that's where the action's at. It's very easy to spot that. Crude oil, second place. That's where the action's at, right? In other words, the action in the stock market, should you be one that's going to stick around and trade this week or start trying to position yourself for 2023, has been in energy, technology, natural gas, crude oil, and the 10-year. You have to go with the 10-year, of course. Everything else, communication services, discretionary, consumer staples, financials, healthcare, industrials, materials, real estate, utilities, the euro, the yen, gold, silver, copper, heating oil, all of that stuff has been flat. Now, normally in a stock market, you've got everything moving around. You got to try to decipher where all the attention is. But when everything is flat and there's something over here spiking, that should be pretty clear where the activity is, and no need to spend a lot of time on that. Interesting here, there were still some stocks in the news. Amazon is saying, well, Bloomberg is saying that Amazon is looking to sell excess space on their planes. So remember, Amazon has Prime Air, and they move their packages all around. Why do they have excess space? Didn't we just go from a period where Amazon was trying to buy airplanes and retrofit them because there was just no airplanes on the planet for them to have? Yeah. Now all of a sudden they have excess space. Who's the number one mover of products? That's Amazon. Why do they have excess space? Are we slowing down? Yeah, in fact, we are slowing down our purchases there, but they're still trying to make some money out of that. Nonetheless, that's not a good sign. That's not a good sign for them there. Costco, let's hop on over to Costco. So this was a killer for years, man. Just up, nonstop. Barron's over the weekend said this whole pullback this year is a buying opportunity for the stock and to look forward to more of what 2016, 17, and 18 gave you. That's their opinion, not mine. Southwest Airlines, feel bad for anybody that was on one of those flights. That's a horrible one. It turned out, if you're paying attention to it, what really started the whole mess was as they started canceling a few flights, they've got 5 or 6 different crew members. Crew would call crew scheduling. Crew scheduling says, hold on a minute, we're busy. We don't know what to do with you just yet. Then more flights got canceled. Then more and more people called crew scheduling, trying to figure out, do I go home? Do I go on a different flight? I'm stuck somewhere. What do I do? Oh, no, I'm timed out. I've worked too much. I can't fly actually anymore. All these things played into it. And I believe it was the CTO that maybe said that. He said that was ultimately a snowball where now we're stuck. We have people scattered everywhere. The passengers are one thing, but if we can't get the crews to the flights, then that slowed us all down. Naturally, they took a bit of a hit here because they canceled the most amount of flights. That means no revenue. Now, a lot of times people look at this and they say, oh, that's not fair. You're beating up on them for having a bad time. No, you're repricing the stock for the lack of revenue they're going to have. Well, that's certainly not Tesla. So let's type that is the exact opposite of Tesla. Oh, man. So they say that they are extending their Shanghai plant production stoppage, or they're bringing down production in Shanghai because of the increase in COVID cases. Well, but China's reopening, and they're not as stringent as they used to be. So you can't use that argument anymore. Investors saw that today. You're blaming it on one thing when we now see that that's definitely not the case, or should not be the case. And I'll bet you that's what dinged Tesla to start the day. By the way, can I go back for a second? Tesla, that's now 7 down days in a row. It's never had more than 7 down days in a row. Do you know that? It's never had 8 days in a row where it's been down. There's 3 other times it was down 7 days in a row, but none of those combination of days saw a loss of more than 14%. We're like over 30% here. So this one's definitely unique. If tomorrow is down, that would be yet another unique event there. Also, for the Tesla fans out there, if you loved it on the first 6 days, you're loving it now, right? Let's go over here. So this is every pullback off of highs for Tesla. It has never fallen this far off of highs ever in history. Now down 72 plus 11%, 83% off of highs, not 83% total, 83% off of highs. And so the average pullback off of highs is only about 20%, 19 to be exact. So this would be the biggest discount over this amount of time that you've ever had in Tesla. So if you're a diehard or you enjoy Tesla or you've been looking to buy it, I would say in the short term, you're obviously due for a bounce, whether that's tomorrow or whenever it happens, because Tesla being down this much, this long, and this consistently has never happened, especially if tomorrow starts with a down day. So something to keep in mind there. It didn't help, by the way, that NIO lowered their production numbers. Did I write it down? They were saying, hey, look, we're going to deliver a total of 43 to 48,000 cars in the fourth quarter. Now they brought that number down. They brought the range down by about 9,000 cars. And so surprisingly, the stock only fell about $8. Oh, no, that's a big, that's a big drop in value there. So that probably played into it there as well. Jazz After Dark. Tonight, we're going to cover short-term losses and gains versus long-term losses and gains. I'm going to show it to you in a way that nobody showed it to you before. I'm going to give you examples really quick, really simple. This would be one that if you wanted your kids to learn or if you didn't quite know how it all worked, I'm going to go over the 2 things that everybody gets wrong when they talk about this, and I'm just going to make it public. Usually advice we give to clients there, I will break it down for you and show you just, this is how you do it, right? This is how you know how much you're going to actually get to take off your taxes or offset long-term versus short-term capital gains. Can short-term capital losses offset long-term capital gains? I get that question a lot. We'll cover that. And then tomorrow, Jazz After Dark, we're going to do what happens to your Social Security when you die? Assuming you're married or were married or have remarried but were divorced, and all these different scenarios. What happens if you have a child and then you die and you're taking Social Security? What happens if you have a child, you die, you're not taking Social Security, but you were really close to doing it? All of that good stuff there. And so we're going to cover that tomorrow. And again, on the research site, if you're interested, jazzwealth.com research /research. It's $13.99 a month, free for clients. But if you just say, I can't be a client, don't want to be a client, you want to get involved in some of the research that's more in depth than what we share here publicly, you're welcome to join. No strings attached. You can cancel anytime. We don't play games with your email. We're too small to be playing games like that. Just give you a good value for the service there. Hopefully you enjoy it. And if you don't, you have access to cancel. There's no need to even bother us. We will take care of you. We do not mess around with that stuff. Anyways, I will take your questions if I happen to have a shot here at doing that. It looks like I do here. And so we'll see what we can answer there. Kuwait? Oh, man, that's awesome. Oh, yeah, you're over. That's right, man. I love it, man. I hope it's good over there. You're not missing much over here, man. Have kids and a legacy or single, no children? Uh-oh. What's you guys talking about? Amazon drivers do all right. Yeah, Kirk, you're right. We've got a couple clients that work in various positions at Amazon. Even Amazon Pilot is one of them there. And they're all, now they work. If anybody here works for Amazon in any capacity, you be honest with me. You guys work for it, but you've been getting paid well. I would agree. I love it. All right. I'm going to wrap it up here and get out of here for the day. I'm sorry about the delay earlier, but we got it fixed. We're back in the game here. You enjoy the rest of your day, and we'll probably see you tomorrow. Do this again, maybe a lesson or two inside of it. And adios.